Cryptocurrency is shaking up the financial world. Bitcoin, the pioneer, remains a hot topic. Its price has skyrocketed, leaving many in awe. But what about Ethereum? It's not just a digital currency, it's a platform for decentralized applications. This technology is revolutionizing industries. Altcoins are also making waves. Coins like Cardano and Solana are gaining traction. They offer unique features and solutions that challenge Bitcoin and Ethereum. The market is unpredictable, with prices fluctuating wildly. One moment, you could see massive gains, and the next, devastating losses. Investing in cryptocurrency requires careful research. Understanding the technology behind each coin is crucial. What problem does it solve? Who is behind the project? These questions can guide investment decisions. Many investors are diversifying their portfolios. They're not just sticking to Bitcoin. Instead, they're exploring various altcoins. This strategy can spread risk and increase potential rewards. However, the volatility can be intimidating. It's essential to stay informed and be ready for sudden changes. The future of cryptocurrency is bright, but it's not without challenges. Are you ready to dive into this thrilling world? Understanding personal finance can change lives. Imagine waking up without the stress of debt looming over you. Financial education empowers individuals to make informed decisions. It helps in budgeting, saving, and investing. Did you know that nearly 70% of Americans are living paycheck to paycheck? This shocking statistic highlights the urgent need for financial literacy. Learning about money management can lead to financial freedom. It opens doors to opportunities like buying a home or starting a business. With the right knowledge, anyone can build wealth over time. Think about it. Compound interest can turn small savings into significant amounts. Yet, schools often overlook this vital subject. Many graduates enter adulthood without essential skills like understanding credit scores or managing debt. This gap in education can lead to poor financial choices. Investing time in financial education is an investment in the future. It's not just about making money, it's about creating a secure life. Everyone deserves the chance to thrive financially. Take control, learn the basics, and watch how it transforms your life. Financial knowledge is power. Don't underestimate its impact. Retirement might seem far away, but planning now is crucial. Imagine waking up one day free from work with enough savings to enjoy life. It's possible. Start by setting clear goals. How much do you need? Calculate your desired lifestyle and expenses. Next, take advantage of employer-sponsored retirement plans. If your company offers a match, contribute enough to get that free money. Don't overlook individual retirement accounts. Traditional and Roth IRAs can provide tax benefits that boost your savings. Automate your contributions. This makes saving effortless and ensures you pay yourself first. Diversification is key. Invest in a mix of stocks, bonds, and other assets to minimize risk. As retirement approaches, gradually shift to more stable investments to protect your nest egg. Keep an eye on your progress, review your savings regularly, and adjust your strategy as needed. Life changes, and so should your plan. Lastly, consider consulting a financial advisor. They can provide tailored advice and strategies that fit your unique situation. The earlier you start, the more secure your retirement will be. Take action today for a brighter tomorrow. Creating a personal budget can feel overwhelming, but it's a game changer. Start by tracking your income. Know exactly how much money flows into your account each month. Next, list all your expenses. Don't forget the little things. Those small purchases add up quickly. Now, categorize your expenses into fixed and variable. Fixed costs are your rent or mortgage, while variable costs include groceries and entertainment. This helps you see where your money goes. Set realistic goals. Aim to save a certain percentage of your income each month. Even small amounts can grow over time. Use budgeting tools or apps to simplify the process. They can help you visualize your spending habits and keep you accountable. Review your budget regularly. Life changes and so should your budget. Adjust it as needed to stay on track. Celebrate your successes, no matter how small. This keeps motivation high. Remember, budgeting isn't about restriction. It's about empowerment. With a solid budget, you gain control over your finances and pave the way for a brighter financial future. Start today and watch your financial confidence grow. Debt can feel like a heavy weight dragging you down, but there's hope. Start by creating a budget. Track every dollar. This simple step can reveal where your money goes. Next, prioritize your debts. Focus on high interest ones first. Paying these off saves you money in the long run. Consider the snowball method too. Pay off the smallest debts first to build momentum. It feels amazing to eliminate a debt. Cutting expenses is crucial. Look for subscriptions you don't use or dining out too often. Small changes add up. Can you find a side hustle? Extra income can accelerate your debt payoff. Don't forget about negotiating. Contact creditors and ask for lower interest rates. Many are willing to help. When it seems overwhelming, seek professional advice. Credit counseling can provide guidance and support. Finally, stay motivated. Celebrate small victories. Remember, getting out of debt is a journey, not a sprint. With determination and the right strategies, freedom from debt is within reach. Imagine the relief of living without that burden. You can do this. Investing in the stock market can feel overwhelming, especially for beginners. The first step is understanding what stocks are. Stocks represent ownership in a company. When you buy shares, you're buying a piece of that company. But how do you choose which stocks to invest in? Start by researching companies you know and trust. Look for strong fundamentals like revenue growth and profit margins. Diversification is key. Don't put all your money into one stock. Spread your investments across different sectors. This reduces risk. Consider using index funds or ETFs. They offer instant diversification and are often less risky than individual stocks. Timing the market is tricky. Many beginners try to buy low and sell high, but this is not easy. Instead, focus on a long-term strategy. Invest regularly, even if it's a small amount. This is known as dollar cost averaging. Stay informed, but avoid getting overwhelmed. Read financial news, follow market trends, and learn from experienced investors. Finally, be patient. Stock market investing is a marathon, not a sprint. With knowledge and discipline, success is within reach. Sustainable finance is transforming the investment landscape. Imagine putting your money where your values are. Ethical and responsible investments are not just a trend, they are a movement. Investors are increasingly seeking opportunities that align with their beliefs. This shift is reshaping entire industries. What does it mean to invest responsibly? It means considering environmental, social, and governance factors. Companies that prioritize sustainability are more likely to thrive in the long run. They attract conscious consumers and build trust. This is not just about profit, it's about purpose. Surprisingly, sustainable investments have shown resilience during economic downturns. They often outperform traditional investments. This challenges the old belief that doing good means sacrificing returns. The data speaks volumes. More investors are realizing that sustainability can lead to financial success. The power of choice lies in the hands of investors. By supporting ethical companies, they can drive change. It's time to rethink the way money flows. Sustainable finance is not just an option. It's a necessity for a healthier planet and a fairer society. The future of investing is here, and it's brighter than ever. Investing in real estate can be a game changer. Imagine turning a simple property into a profitable asset. The key is understanding the market. Prices can fluctuate wildly, but with the right timing and research, massive gains are possible. Location is everything. A property in a growing neighborhood can skyrocket in value. Think about it. A bustling area with new schools, shops, and parks attracts families and investors alike. This demand drives prices up. Consider rental properties as a steady income source. They provide monthly cash flow and potential appreciation over time. But beware, not all properties are created equal. Analyze rental yields carefully. Flipping houses is another thrilling option. Buy low, renovate, and sell high. It sounds simple, but it requires a keen eye and a solid plan. Unexpected expenses can arise, so always budget for surprises. Finally, stay informed. Real estate trends change rapidly. Join local investment groups or follow market reports. Knowledge is power in this game. With the right strategy, property investment can lead to financial freedom. Are you ready to dive in? Money management is a crucial skill, yet many young people lack proper education on the subject. Imagine a world where children understand the value of money from an early age. Teaching kids about finances can empower them for life. Start with simple concepts like saving and spending. A piggy bank can be a fun way to introduce saving. Encourage them to set goals, like saving for a toy or game. This creates excitement and a sense of achievement. Next, discuss the difference between needs and wants. Help them recognize what is essential versus what is a luxury. This understanding can prevent impulsive purchases later in life. Introduce the idea of budgeting. Show them how to plan their allowance or earnings. They can learn to allocate money for savings, spending, and even sharing. Engage them with real-life scenarios. Play games that simulate financial decisions or involve them in family budgeting discussions. This makes learning interactive and relatable. By instilling these values early on, children can grow into financially savvy adults, ready to tackle the challenges of the real world. The earlier they learn, the better prepared they will be. Managing business finances can feel overwhelming, but it doesn't have to be. Start by tracking every dollar. Use software or spreadsheets to monitor income and expenses. This clarity reveals where money is flowing and where it's leaking. Next, set a budget. This isn't just a number, it's a roadmap. Allocate funds for essentials, savings, and growth. Stick to it. Cash flow is king. Keep a close eye on it. Positive cash flow means your business can thrive. If cash is tight, consider options like short-term loans or lines of credit. But be cautious. Debt can spiral quickly if not managed well. Invest in your financial knowledge. Understand terms like ROI, profit margins, and net income. This knowledge empowers better decisions. Regularly review your financial statements. They tell the story of your business. Are you on track? What needs adjustment? Don't shy away from seeking help. Financial advisors can provide insights that transform your business. Remember, managing finances isn't just about numbers. It's about making your entrepreneurial dreams a reality. Take control and watch your business flourish. Understanding credits and loans can feel overwhelming. There are many types, each serving different needs. Personal loans are great for one-time expenses, like medical bills or home repairs. They offer fixed rates and predictable payments. Then there's the credit card. It's flexible but can lead to debt if not managed wisely. For larger purchases, consider a mortgage. This long-term loan helps buy a home, but it comes with serious commitments. Auto loans are specific for vehicles, often with lower interest rates. Choosing the right option depends on your financial situation. Ask yourself, what do you need the money for? How quickly can you pay it back? Interest rates vary widely. A lower rate means less money spent in the long run. Look for hidden fees too. Some loans come with costs that can surprise you later. Always read the fine print. Finally, shop around. Compare offers from different lenders. Don't settle for the first option. The best loan is one that fits your needs and budget perfectly. Make informed choices and secure your financial future. Insurance is more than just a safety net, it's a lifeline. Imagine facing a disaster without proper coverage. The financial burden can be overwhelming. A single accident or unexpected event can wipe out savings in an instant. Good insurance coverage protects against this chaos. Think about health insurance. Medical bills can skyrocket. One hospital visit might cost thousands. Without coverage, many people struggle to pay. It's not just about health, it's about peace of mind. Knowing there's support when it's needed most is invaluable. Homeowners insurance is another critical area. Natural disasters can strike without warning. A flood or fire can destroy everything. Rebuilding without insurance is nearly impossible for most. Good coverage ensures that homes can be restored and lives rebuilt. Car insurance is equally vital. Accidents happen. Legal fees and repairs can add up quickly. Comprehensive coverage shields drivers from significant financial loss. Investing in good insurance is investing in security. It's not just about protecting assets, it's about safeguarding futures. Don't wait for a crisis to realize the value of solid coverage. Prepare today for a safer tomorrow.
Robo-advisors are changing the way people invest. Imagine having a financial advisor available 24/7 but at a fraction of your cost. These automated platforms use algorithms to manage investments, making them accessible to everyone. No need for a hefty minimum balance or extensive financial knowledge. Just a few clicks, and you're on your way to building wealth. One of the biggest advantages is the low fees. Traditional advisors can charge 1% or more of your assets annually. Robo-advisors typically charge 0.25% to 1%. That means more money stays in your pocket. Plus, they offer automatic rebalancing. Your portfolio adjusts itself to maintain your desired risk level, even when the market fluctuates. Diversification is another key benefit. Robo-advisors invest in a variety of assets, spreading risk and increasing potential returns. They also use tax loss harvesting techniques to minimize your tax burden. With easy-to-use interfaces, investing has never been simpler. No more confusion or overwhelming jargon, just straightforward guidance tailored to your goals. Robo-advisors are not just a trend, they are the future of investing. Are you ready to embrace it?
Insurance is more than just a safety net, it's a lifeline. Imagine facing a disaster without proper coverage. The financial burden can be overwhelming. A single accident or unexpected event can wipe out savings in an instant. Good insurance coverage protects against this chaos. Think about health insurance. Medical bills can skyrocket. One hospital visit might cost thousands. Without coverage, many people struggle to pay. It's not just about health, it's about peace of mind. Knowing there's support when it's needed most is invaluable. Homeowners insurance is another critical area. Natural disasters can strike without warning. A flood or fire can destroy everything. Rebuilding without insurance is nearly impossible for most. Good coverage ensures that homes can be restored and lives rebuilt. Car insurance is equally vital. Accidents happen. Legal fees and repairs can add up quickly. Comprehensive coverage shields drivers from significant financial loss. Investing in good insurance is investing in security. It's not just about protecting assets, it's about safeguarding futures. Don't wait for a crisis to realize the value of solid coverage. Prepare today for a safer tomorrow.
Robo-advisors are changing the way people invest. Imagine having a financial advisor available 24/7 but at a fraction of the cost. These automated platforms use algorithms to manage investments, making them accessible to everyone. No need for a hefty minimum balance or extensive financial knowledge. Just a few clicks, and you're on your way to building wealth. One of the biggest advantages is the low fees. Traditional advisors can charge 1% or more of your assets annually. Robo-advisors typically charge 0.25% to 1%. That means more money stays in your pocket. Plus, they offer automatic rebalancing. Your portfolio adjusts itself to maintain your desired risk level, even when the market fluctuates. Diversification is another key benefit. Robo-advisors invest in a variety of assets, spreading risk and increasing potential returns. They also use tax loss harvesting techniques to minimize your tax burden. With easy-to-use interfaces, investing has never been simpler. No more confusion or overwhelming jargon, just straightforward guidance tailored to your goals. Robo-advisors are not just a trend, they are the future of investing. Are you ready to embrace it?
Financial crises can hit hard and fast, leaving many unprepared. The first step is to assess your current situation. Know your income, expenses, and debts. This clarity can feel empowering. Next, create a budget that prioritizes essentials. Cut non-essentials. It's time to be ruthless. Consider building an emergency fund. Even a small amount saved can provide a safety net. It's surprising how quickly it adds up. Explore alternative income sources, like freelance work or selling unused items. Every little bit helps. Don't forget to communicate with creditors. Many are willing to negotiate terms during tough times. This can lead to lower payments or deferred interest. Investing may seem risky now, but consider it carefully. Look for opportunities in downturns, as markets often rebound. Stay informed, but avoid panic. Knowledge is power. Seek advice from financial experts if needed. Finally, remember that resilience is key. Adaptability can turn a crisis into a chance for growth. Stay focused, stay positive, and keep moving forward. Your financial future can still be bright, even in the darkest times.
Trading and speculation can feel like a thrilling roller coaster ride. The potential for profit is immense, but so are the risks. Every decision is a gamble. Markets can shift in an instant, leaving traders breathless. Imagine investing in a stock that skyrockets overnight. The euphoria is intoxicating. But what happens when the tide turns? Losses can be devastating. Understanding market trends is crucial. Knowledge is power, but even seasoned traders can be caught off guard. Opportunities abound in volatile markets. Cryptocurrencies, for example, have created fortunes for some, yet they can vanish just as quickly. Diversification is key. Spreading investments across different assets can help manage risk. Emotional control is vital. Fear and greed can cloud judgment. Speculation isn't for the faint-hearted. It requires research, strategy, and a strong stomach. Are you ready to embrace the thrill? The chance to turn a small investment into a significant return is tantalizing. But remember, great rewards and great risks. Stay informed, stay disciplined, and always be prepared for the unexpected. The world of trading is waiting. Tax planning can feel overwhelming, but it doesn't have to be. Imagine keeping more of your hard-earned money in your pocket. That's the goal of effective tax strategies. First, consider tax deductions. They can significantly lower your taxable income. Common deductions include mortgage interest and charitable contributions. Are you taking full advantage of them? Next, think about tax credits. Unlike deductions, credits directly reduce your tax bill. Some credits are available for education, energy-efficient home improvements, and childcare. It's like finding free money. Another powerful strategy is tax-deferred accounts. Contributing to a 401k or an IRA can lower your taxable income now and grow your savings for the future. But don't forget about capital gains. Holding investments for over a year can reduce the tax you pay on profits. Finally, consider consulting a tax professional. They can uncover hidden opportunities tailored to your situation. Tax planning isn't just about compliance, it's about smart financial moves. With the right strategies, you can optimize your taxes and maximize your wealth. Why pay more than you have to? Fintech is revolutionizing the finance sector in ways we never imagined. Digital wallets, peer-to-peer lending, and robo-advisors are just the start. Traditional banks are feeling the heat as these innovative solutions offer faster, cheaper, and more accessible services. Imagine sending money across the globe in seconds with minimal fees. That's the power of fintech. Cryptocurrencies have also emerged, challenging the very concept of money. Bitcoin and Ethereum are not just buzzwords, they represent a shift in how we perceive value. The decentralized nature of blockchain technology is making transactions more secure and transparent. Who would have thought that technology could disrupt an industry so deeply rooted in tradition? Moreover, fintech is making financial literacy more accessible. Apps that analyze spending habits and suggest savings plans are empowering individuals to take control of their finances. This democratization of financial services is crucial in bridging the gap between banked and unbanked populations. The future of finance is here, and it's digital. Embracing fintech means embracing a world of possibilities. Are you ready to dive into this exciting new era? Savings is not just a personal choice, it's a societal necessity. Imagine a world where everyone prioritizes saving. It could transform communities and economies. Start by educating people about the power of saving. Share stories of individuals who achieved their dreams through disciplined saving. Highlight the importance of setting clear goals. Whether it's a new home, education, or a dream vacation, having a target makes saving more meaningful. Community programs can play a pivotal role. Organize workshops that teach budgeting skills and smart spending habits. Use engaging activities to make learning about finances fun. Encourage businesses to offer incentives for employees who save. Even small contributions can lead to significant changes over time. Social media can amplify the message. Create challenges that inspire people to save together. A collective effort can foster a culture of saving. Celebrate achievements, big or small, to motivate others. Lastly, promote the idea that saving is not just about money, it's about building a secure future. Together, let's cultivate a savings culture that empowers everyone to thrive. The journey starts now. Imagine living a life where happiness doesn't depend on endless spending. frugal living is not about deprivation, it's about making smarter choices. Picture this, a cozy home filled with love, not clutter. Embracing a frugal lifestyle means prioritizing experiences over possessions. It's about savoring homemade meals instead of expensive dinners. Think about the joy of a picnic in the park rather than a pricey restaurant. You can explore nature, enjoy fresh air, and create lasting memories without breaking the bank. Frugality encourages creativity. DIY projects can transform your space and save money. What about gardening? Growing your own fruits and vegetables can be rewarding and delicious. Consider the thrill of finding a hidden gem at a thrift store. Each purchase tells a story and supports sustainability. Living well with less fosters gratitude. It shifts focus from what's missing to what truly matters. Friendships, adventures, and personal growth become the treasures of life. So are you ready to embrace a fulfilling life without the weight of excess? Discover the freedom that comes with frugality. Start today and watch your life transform. Cryptocurrencies are shaking up the financial world. They offer freedom, anonymity, and potential for huge profits. But with great power comes great responsibility. Governments are starting to take notice. Regulations are on the horizon, and they could change everything. Imagine a world where crypto is fully regulated. It could mean more security for investors, but also less privacy. Some countries are embracing crypto, while others are cracking down hard. This divide creates uncertainty. Investors are left wondering what the future holds. Will regulations stifle innovation or pave the way for mainstream acceptance? Major players in the crypto space are advocating for clear rules. They argue that regulation can protect consumers and legitimize the market. But critics warn that too much regulation could kill the very spirit of cryptocurrency. The battle between freedom and control is heating up. As governments craft new laws, the landscape of crypto will shift dramatically. It's a race against time. Will cryptocurrencies thrive in a regulated world, or will they be forced underground? The future is uncertain, but one thing is clear. Change is coming, and it's going to be monumental. Money decisions aren't just about numbers. They are deeply influenced by emotions and psychology. Have you ever made a purchase and later wondered why? That's the power of behavioral finance. It reveals how our minds can lead us astray. For instance, loss aversion explains why losing $100 feels worse than gaining $100 feels good. This can lead to poor investment choices, like holding on to losing stocks too long. Then there's the concept of mental accounting. People often treat money differently based on its source. A tax refund might be spent more freely than regular income, even if it's all just money. This can create irrational spending habits. Social influences play a huge role too. Ever felt pressured to buy the latest gadget because everyone else has it? That's social proof at work. We tend to follow the herd, sometimes ignoring our own needs and goals. Understanding these psychological traps can empower better financial decisions. Recognizing emotions in financial choices is the first step. By being aware, it's possible to break free from these patterns and make smarter, more rational choices. Embrace the power of knowledge to transform financial habits. Investing in startups can feel like a thrilling roller coaster ride. The potential for massive returns is enticing, but so are the risks that come with it. Did you know that about 90% of startups fail? That's a staggering statistic. Yet amidst the failures, there are those rare gems that skyrocket in value. Imagine investing in a tiny tech company that later becomes a household name. Rewards can be life-changing. But what drives these investments? Passion, innovation, and the dream of changing the world. Startups are often led by visionary founders who are willing to take bold risks. Investors are drawn to their energy and ideas, hoping to ride the wave of success. However, due diligence is crucial. Researching the market, understanding the business model, and assessing the team can make all the difference. Every investment carries uncertainty. The key is to balance risk and reward. Diversifying your portfolio can help mitigate losses. Remember, while the thrill of startup investing is real, it's essential to stay informed and make strategic choices. The journey may be risky, but the potential for incredible rewards makes it worth exploring. Social media has transformed the way we learn about finance. Influencers are now at the forefront, sharing tips and strategies that can change lives. But how reliable is their advice? Many followers trust these personalities without question. This can lead to poor financial decisions. Some influencers promote get-rich-quick schemes that sound too good to be true. These can be dangerous traps. Others, however, provide valuable insights into budgeting, investing, and saving. The key is to know the difference. It's essential to research the background of these influencers. What are their qualifications? Are they sharing personal experiences or just regurgitating popular trends? Transparency is crucial in finance. Moreover, the emotional connection influencers create can sway decisions. A relatable story can make risky investments seem appealing. It's vital to approach their content critically. Engaging with financial education on social media can be beneficial, but caution is necessary. Balance inspiration with skepticism. The right information can empower individuals to take control of their finances, but misinformation can lead to disaster. Choose wisely and stay informed. Getting a mortgage approved quickly can feel like a daunting task, but it doesn't have to be. Start by checking your credit score. A high score boosts your chances significantly. Next, gather essential documents like pay stubs, tax returns, and bank statements. Having these ready can speed up the process immensely. Don't forget to get pre-approved. This shows lenders you're serious and financially ready. Choose a lender who communicates well. Quick responses can make a world of difference. It's also crucial to keep your finances stable. Avoid making large purchases or changing jobs during the application process. Lenders want to see consistency. Consider a larger down payment if possible. This reduces the loan amount and can lead to faster approval. Lastly, be honest about your financial situation. Transparency builds trust with lenders, making them more likely to expedite your application. With these steps, the path to mortgage approval becomes clearer and faster. Take charge of your future home today. Finding the best interest rate on a mortgage can feel overwhelming, but it doesn't have to be. Start by checking your credit score. A higher score can unlock better rates. Did you know that even a small difference in interest can save you thousands over time? Next, shop around. Don't settle for the first offer. Lenders compete for your business, so leverage that. Get quotes from multiple banks and credit unions. Consider the timing of your application. Rates fluctuate, so keep an eye on market trends. If you see a dip, jump in. Also, think about the loan type. Fixed-rate mortgages provide stability, while adjustable rates might offer lower initial payments. Don't forget about down payments. A larger down payment can lower your interest rate. It shows lenders you're serious and reduces the risk. Finally, negotiate. Many people don't realize they can ask for a better rate. It's worth a shot. Remember, every percentage point counts. Take the time to research, and you can secure a deal that saves you money for years to come. Buying a home is a thrilling journey, but many make costly mistakes along the way. First, skipping the pre-approval process can lead to disappointment. Imagine finding your dream home only to realize you can't afford it. Always get pre-approved to know your budget. Next, don't overlook the importance of location. The perfect house in a bad neighborhood can quickly become a nightmare. Research the area, schools, and future developments. Many buyers also ignore hidden costs. It's not just about the mortgage. Consider taxes, insurance, and maintenance. These can add up and strain your finances. Rushing the inspection is another trap. Skipping it might save time, but it could lead to expensive repairs down the road. Always invest in a thorough inspection. Finally, avoid getting emotionally attached too soon. Buyers often overpay because they fall in love with the property. Keep a clear head and stick to your budget. Being informed and cautious can make all the difference. Avoid these common pitfalls and turn your home buying experience into a success story. Saving for your first home can feel overwhelming, but it doesn't have to be. Start by creating a budget. Track your income and expenses. This helps identify areas where you can cut back. Every dollar saved brings you closer to your goal. Next, set a specific savings target. Knowing how much you need makes it easier to stay motivated. Open a dedicated savings account. This keeps your home funds separate and less tempting to dip into. Consider automating your savings. Set up a monthly transfer to your home fund. You won't miss what you don't see. Look for additional income opportunities. A side job or freelance work can boost your savings significantly. Don't forget about government programs. Many offer help for first-time buyers, such as grants or tax credits. Research what's available in your area. Finally, stay patient and persistent. The journey might be long, but every step counts. Celebrate small milestones along the way. Your dream home is within reach. With determination and smart planning, you'll unlock the door to your future. Consumer trends are shifting rapidly, and they can have a huge impact on personal finances. Imagine waking up to find that what you used to buy is now out of style. Trends dictate what products are in demand, and this can influence prices. When everyone wants the latest gadget, prices soar. Are you ready to pay more just to keep up? Sustainability is another trend reshaping spending habits. People are increasingly opting for eco-friendly products. This shift can mean higher initial costs, but it often leads to long-term savings. Investing in quality over quantity can save money down the line. Subscription services are also on the rise. Monthly fees for everything from streaming to meal kits can add up quickly. Are these services really worth it? Tracking subscriptions is crucial to avoid overspending. Finally, the digital marketplace is booming. Online shopping offers convenience, but can lead to impulse buys. It's essential to stick to a budget and plan purchases. Understanding these trends can empower smarter financial decisions and help navigate the complex world of consumerism. How will you adapt your spending habits? Money can be a source of stress or comfort. Did you know that financial problems are one of the leading causes of anxiety? The pressure to pay bills, manage debt, and save for the future can weigh heavily on anyone. This stress can lead to sleepless nights and a constant feeling of worry. On the flip side, financial stability can bring peace of mind. When people feel secure about their finances, they often report higher levels of happiness and lower levels of stress. It's fascinating how something as tangible as money can impact mental health so profoundly. Consider this. The way money is managed can reflect personal values and priorities. Poor financial choices can lead to feelings of guilt and shame. Conversely, budgeting and saving can foster a sense of control and accomplishment. Understanding this connection is crucial. It's not just about having money, it's about how it affects emotional well-being. Seeking help from financial advisors or mental health professionals can create a healthier relationship with money. Recognizing the emotional side of finances can lead to better mental health and a more fulfilling life. The collaborative economy is transforming how people earn money. Imagine sharing your home, car, or skills with others. This isn't just a trend, it's a revolution. Platforms like Airbnb and Uber have changed the game. People are making extra income by renting out their space or driving others around. But it goes beyond that. Think about skills you possess. Can you cook, teach, or design? Websites like TaskRabbit and Fiverr let you monetize your talents. You set your prices and work on your terms. It's empowering and liberating. What's even more surprising is the rise of community-driven initiatives. People are pooling resources to create shared spaces, tools, and even services. This fosters a sense of belonging and collaboration. The potential is huge. Imagine a world where everyone shares what they have. It reduces waste and builds connections. The collaborative economy is not just about making money. It's about creating a sustainable future. Are you ready to join this movement? The opportunities are endless, and the time to act is now. Climate change is reshaping the financial landscape in ways we never imagined. Investors are waking up to the reality that sustainability is no longer optional. It's a necessity. The demand for sustainable investments is skyrocketing. Companies that ignore environmental concerns risk losing not just their reputation, but also their funding. Surprisingly, sustainable investments have outperformed traditional ones. This shift is driven by a new generation of investors who prioritize ethical practices. They want to know where their money goes. Climate risks are now seen as financial risks. Insurers and banks are adjusting their strategies to account for potential losses from climate disasters. The transition to a low-carbon economy presents both challenges and opportunities. Renewable energy projects are attracting billions of investment. Green bonds are becoming mainstream, offering a way to fund eco-friendly initiatives. But it's not just about profits. There's a growing awareness that financial stability depends on a healthy planet. As climate change accelerates, the financial sector must adapt. The future of finance hinges on sustainability. Will companies rise to the challenge or be left behind? Freelancers face unique challenges with income that fluctuates. One month can bring in a windfall, while the next may feel like a drought. This unpredictability can lead to stress and financial instability. So, how can freelancers manage this variable income effectively? First, create a budget that reflects your average monthly earnings. Track your expenses diligently. Knowing where your money goes is crucial. Set aside a portion of your income during high-earning months. This creates a financial cushion for leaner times. Next, consider building an emergency fund. Aim for 3 to 6 months worth of expenses. This fund acts as a safety net, providing peace of mind. Diversifying income streams is another smart strategy. Explore side gigs or passive income opportunities. This can stabilize your finances and reduce reliance on one source. Finally, invest in tools that help manage your finances. Apps and software can simplify tracking income and expenses. Stay organized and informed. By implementing these strategies, freelancers can navigate the ups and downs of income with confidence. Financial stability is possible, even in the freelance world. Cyber attacks are on the rise, and your financial assets are prime targets. Every day, hackers devise new ways to steal your money and personal information. Imagine waking up to find your bank account drained overnight. It's a nightmare that can become reality if you're not careful. Strong passwords are your first line of defense. Use a mix of letters, numbers, and symbols. Change them regularly. Two-factor authentication adds an extra layer of security that's hard for hackers to bypass. Be wary of phishing scams. Emails that look legitimate can trick you into giving away your details. Always verify the sender before clicking any links. Keep your software updated. Cyber criminals exploit vulnerabilities in outdated systems. Regular updates patch these holes and protect you from attacks. Consider using a password manager. They securely store your passwords and generate strong ones for you. Lastly, monitor your accounts frequently. Report any suspicious activity immediately. Taking these steps can make a significant difference in safeguarding your financial future. Don't wait until it's too late. Act now to protect what matters. most. Buying a home can feel like a dream come true, but is it really the best choice? In 2025, the housing market is shifting. Prices are soaring, making homeownership a heavy investment. On the flip side, renting offers flexibility. You can move easily, and you're not tied down by a mortgage. But what about stability? Owning a home can provide a sense of security, especially as rental prices climb. Consider the costs. Buyers face down payments, closing fees, and maintenance. Renters enjoy fewer responsibilities, but those monthly payments add up. Imagine pouring money into a rental with nothing to show for it in the end. Yet, if the market crashes, homeowners could lose value. Think about your lifestyle too. Are you ready for commitment, or do you crave freedom? In 2025, the choice is more complicated than ever. Weigh the pros and cons carefully. The decision impacts finances, lifestyle, and future plans. Will you invest in a property or embrace the flexibility of renting? The answer could shape your financial future. Negotiating the price of your home can save you thousands. Start by doing your homework. Research recent sales in your neighborhood. Know the market trends. Are homes selling fast or sitting? This knowledge gives you leverage. When you find a home you love, don't rush in with an offer. Start with a lower price than what you're willing to pay. This creates room for negotiation. Sellers often expect some back and forth. Be prepared for counteroffers. Use any flaws in the home to your advantage. If there are repairs needed, mention them. This can justify a lower price. Don't be afraid to walk away if the deal doesn't feel right. Keep emotions in check. It's easy to fall in love with a house, but remember, it's a business transaction. Stay calm and stick to your budget. Lastly, consider hiring a skilled real estate agent. They know the ins and outs of negotiating. Their experience can lead to significant savings. With these strategies, you can navigate the negotiation process like a pro and secure a fantastic deal.